Welcome to Spotty on Shares, everyone. Your market update for Wednesday, the 5th of May, where for the next 30 minutes we talk all things share market. Of course, there has been a change to our format. You can go to spotty.com.au to learn why. For the next 30 minutes, we're going to talk about the main news of the trading day, ask our resident expert for their views on what's going on, and ask them, of course, your burning market questions. So if you've got those questions, question at spotty.com.au or text us 0480 079 089. And of course, if we can't answer it on the day that you ask it, we will answer it in the subsequent episodes to come. So patience, everyone. We will get round to you. So let's bring in today's chief spotter, starting with a great friend of the program, Kunal Sawhney from 𝐊𝐿𝐼𝐴. Hello, Kunal. How are you doing?
I'm very good. Elio, thank you for inviting me. And is it raining in Melbourne? Because it's raining in Sydney.
No, it's perfect today, actually. It's a beautiful sunny day, as it always is in Melbourne. It's just a conspiracy with the news networks, Kunal. Trust me, it's always great down here. But look, let me just start, though, and sincere this is for the moment, from all of us here in the Ticker News studio and everyone that's watching. I'm sure both yourself, your team at 𝐊𝐿𝐼𝐴 will have those or know of those who are closely affected by the events of what's going on in India at the moment. So we sincerely wish for all of them safe travels moving forward. And, we hope that everything's okay. So, just sending our best wishes to you, Kunal.
Thanks, Elio. It's right now, the situation in India is pretty dire and a lot of deaths and a lot of cases. So your wishes are very, very appreciated.
Yeah, no, stay vigilant, my good man. We're cheering you on. Look, let's get back to the stock talk now. Why don't you tell us a little bit about yourself and, more importantly, the great business that you've built there at 𝐊𝐼𝐴?
Sure. So my name is Kunal Sawhney. I'm the founder and CEO of 𝐊𝐼𝐴 Group. We have been in existence for more than 8 years. We are a research platform, a media platform that covers equities, commodities, currencies, a lot of things from all over the globe. We have offices in Sydney, in Australia, in New Zealand, in Auckland, in London, UK, and we are also in Toronto, in Canada. And we have just entered the US market this month. So now we are in San Francisco in the US as well.
Yeah, that's right. So great global exposure is what you get with Kunal. Also deep coverage into our ASX market as well. And you'll be glad to know, Kunal, the questions that were asked for you today. Many of them, we do look into those smaller areas. So really showcasing your abilities today on the show. But currently, as we go to air, the market had a bit of a false start, but it's returning back into favour at the moment. The XJO up 0.7%, the XAO up 0.6%. So good to see a bit of positive momentum returning there. I want to start, though, Kunal, with your thoughts on the ANZ report. It was a cash profit of some $2.98 billion for the first half, which was just shy of analyst expectations. Now, of course, this was in contrast to Westpac, who reported earlier this week, where that was a beat. Now, the divvy is back to 70 cents, higher than the COVID interim of 25, but lower than the pre-level of some 80 cents. Return on equity is rising, deferrals are down. Tier 1 capital sits comfortably at 12.4. Would be very interested to get your view in regards to this one, Kunal, because at the moment, as we go to air, the stock is down 1.8%, but then it's fair to say it had a rally on the back of the Westpac news a few days ago. So what did you make of ANZ's report today?
So ANZ bumper profit result for the half year ending 31st March has emerged, on the back of the pandemic hit banking sector, where when the COVID-19 hit Australia, there were a lot of banks which were struggling, with ANZ announcing a much higher dividend of 70 cents per share on the back of strong earnings. We can see that they're gradually emerging from the COVID-19 losses. And Elio, when you said it's down 1.9%, there also have been talks by the Fed Reserve in the US about increasing the interest rates. So that might also be affecting the banking sector in Australia as well.
Yeah, but I think, though, everyone's quite happy that things are going well. And for as long as the property market goes up, given they've now sold off the life insurance and OnePath, of course, that's really where their fortunes will lie. The next topic, Kunal, if I can ask you about, is Amcor, which upgraded its earnings forecast for the 2021 financial year after a strong rebound during the third quarter. Net income rose some 58%. EPS was up some 16% to US 51.5 cents, I think it was. On a constant currency basis, I should say. Synergy benefits from the Bemis acquisition seem to have also contributed to the bottom line, and they declared a quarterly dividend of some 11.75 cents per share. Kunal, I know it's not really the most exciting of stocks, Amcor, but what did you make of this result?
Well, Amcor, the ASX code is AMC. The shares are over 5-month high as the company has upgraded its earnings growth forecast for the financial year 2021. Despite a dynamic operating environment, packaging company, the cardboard company, whatever you call it, Amcor has been able to deliver strong year-to-date performance in line in the 9 months period ended March 2021. The company's business has demonstrated resilience in COVID-19 times, given its importance in the supply of essential consumer goods. Such growth momentum is expected to continue as it upgrades its full year adjusted EPS growth outlook. So this is gonna continue. COVID-19 is still there all over the world, and people are looking for those essential items, and packaging is needed for those essential items, and that's where Amcor should do well.
Yeah, interestingly, it's been quite the tailwind, and that reflected in the price, as Kunal mentioned correctly. Another topic for discussion today, Incitec pivot to announce that their subsidiary, the fertiliser business, had entered a 20-year offtake agreement with Piedmont Chemicals. The commitment will be to take up to 2.3 million tonnes per annum of fertiliser. I'll tell you what, that's a lot of weed killer. But nonetheless, but seriously, we know that things are very strong in the ag sector here in Australia. Further evidence of that. IPL, as we go to air, currently up 1.7% on the back of that news. Amcor up 2.3% on their strong update, just to complete that story. Kunal, back to you in regards to, on the back of NIB's positive update a few weeks ago, Medibank has actually come out saying that it's going to be upgrading its growth outlook. It's done at the Macquarie conference, of course, this morning. The company is looking to achieve total policyholder growth of some 3.5 to 4%, which is up on their previous guidance of 3%. Further to that, claims expenses down slightly, down to 2.5%, as opposed to the 2.6 they had previously. Kunal, there's been a bit of life coming back to these health insurers. NIB's done quite well. MPL today up 2.14% as we go to air. Are you favourable on these guys? Have they turned the corner finally?
Okay, MPL, Medibank Private Limited, they have continued momentum in policyholder growth, which has enabled health insurance company Medibank to update its financial year 21 outlook. The company now intends to achieve total policyholder growth between 3.5% to 4%, which is a very good growth number. The company's business appears to be going uphill as it anticipates its clinic numbers to increase by 10 before 30th June. So overall, the policyholder growth is driving it, and as COVID-19 has hit, more people are worried about their health, and hence health insurance policies or the health insurance companies are doing really well.
Yeah, and trending very strongly, and no doubt in many momentum portfolios at the moment. Also presenting at the conference, Kunal, is Healius, who will tell analysts that non-COVID revenue growth has grown some 5% on the previous corresponding period. Of course, they do a range of the COVID tests as well, and they did 3 million last quarter. But excluding that, imaging's doing well, up 8%, and day hospitals up 25%. Do you think this is a further read on that MPL result, that everyone seems to be getting back into the whole private health insurance theme, and therefore beneficiaries like diagnostic and day hospital firm Healius is doing well on the back of that? What do you think, Kunal?
So Healius is doing well. First of all, they're reaping the benefits of great growth in commercial COVID testing. They did, as you said, 3 million COVID tests in total, with over 800,000 undertaken in Q3 of financial year 21. Despite the rollout of vaccinations, COVID testing levels are likely to remain strong in the foreseeable future, as there may be increasing incidents of COVID in Australia as the borders open. So one thing, Elio, we do need to remember here is that Healius is obviously in Australia, but they will be in great demand once the travel opens. And that's where I think there's a lot of growth coming for them.
Okay, and just to round it off, QBE at their AGM said they're going to be reinstating their dividend to 65% of cash earnings. The market liking that announcement, up 3.9% at the moment to $10.43.5. So it's time for us to answer your questions. Remember, we can't take your personal circumstances into account. It's only of a general nature only. You have to do your own research or speak to someone licensed to have that conversation with you. We also have interest in stocks. We try to disclose that during the program, but sometimes in the cut and thrust of stock discussion, we forget. In that case, feel free to contact either of us directly in order to get any clarification as to whether we do hold an interest in a particular business. All right, then, Kunal, let's get to the questions. And as I said, people were aware of your appearance today. Peter asked about nickel mines. Their code is NIC. Now, I'm just going to read a summation of his feedback and then be interested in your view, Kunal. Basically, he said that on the first quarter results, they were weaker than expected, mainly due to a power outage and seismic event and labour availability, of course, with their Indonesian operations. Basically, the price dropped from $1.28.5 to $1.13. The price seems to have stabilised here a little bit, Kunal, and I think young Peter is wondering whether this is an opportunity to acquire an interest in this business, given that it would appear that that short-term hit has now washed through.
Here we go. So let's talk about nickel mines. The ASX code is NIC. And yes, the quarterly numbers were definitely weaker than expectations, with nickel production and sales dropping lower. If you look at their cash flows and EBITDA, those figures were also down. So the reaction in its share price was in sync with the numbers. However, from a technical perspective, the likelihood of a complete trend change towards downside is more prominent than just a correction. The major reason being the hefty price drop you mentioned was a downside breakout from a descending triangle pattern. So if you look at the technicals, it points to a bearish outlook, and that too on a heavy volume, which increases its reliability. Also, the pattern has formed near the top of this ongoing bull run, which definitely calls for another look at the long positions.
Yeah, I mean, look, I actually hold an interest in it, Peter, notwithstanding that I took it in the neck then. It's done quite well. I still believe in that nickel story, proven producer with good margins, and the Indonesian government allowing them to export the nickel offshore. There was a previous period where it got locked in. Once those doors opened, that's when I got in. But yes, I have taken a bit of a haircut, but I've maintained my position for now. But yes, I do have stops from here. But price is stabilised, so I'm relatively happy. Just quickly from Helen, who asked me specifically about a company by the name of Dubber, who their code is DUB for those playing along at home. They allow for communication over the computer without all the old school hardware, like a handset, for example, or the old servers that the PABX systems needed to use. It's really grown quite well, actually. Annual recurring revenue and clients are both going on the right trajectory. During the last quarter, and what Helen refers to in her question to me is in regards to them making available their unified call recording solution on the Zoom network that basically allows corporations or compliance teams to record the actual call being conducted on Zoom. So, of course, we were getting on all these networking channels and discussing things, but nothing was being recorded. Obviously, that's something you can do with a PABX phone system. I actually really think that is pretty good in regards to the announcement. So, you got to be quite happy with regards to that. It's important to note, though, that it's on a price to revenue of some 41 times at the moment. That is expected to drop by August 22, Helen, to 15 times, which is more reasonable. So in essence, the summary is price perfection at the moment. Have a trailing stop set at the moment. I'd have that at 237 first. It's way away from that at the moment at its current price, now at $3. But really, you got to give it some room to breathe when you get these parabolic rises that go north-northeast. Kunal, I want to ask you about a hot space at the moment that's gone a little cool, interestingly enough, if you look at their participants. It's about lithium. Now, the question comes from Vladimir, and he asks about Jindalee Resources, JRL. His question is that it's recently announced that it's the largest deposit of lithium in the United States. He's taken a nibble at around $2.80. He believes it's a relatively low market cap for a lithium player and wants to know whether JRL could become a Vulcan, a VUL, or could it become an Orocobre or Galaxy, who have now merged, of course. What's your view in regards to JRL and the broader sector too, Kunal?
Okay, here we go. So mineral explorer Jindali Resources, JRL is the code, and they have recently confirmed McDermott as the biggest lithium deposit in the US by contained lithium in mineral resource. Latest result from the resource update underlines the potential of the McDermott project as a possible source of future supply to the rapidly growing US battery manufacturing industry. The recent development is likely to intensify market interest in the company and its US-based lithium project over the months ahead. When compared to other lithium players like Vulcan Energy, VUL, Jindali appears to offer investors a good and inexpensive way to invest in the EV space, electric vehicle space, at a share price of less than $3. Besides that, Jindali's share price has gained a stellar 880% over the last 1 year. So they have done fairly well, and I think they should do well on the back of electric vehicles growing to nearly 50% of vehicles by 2030. So there's a lot of scope there.
Yeah, no, it certainly is. I do want to come to you now. I want to change themes, if you don't mind. One of the questions comes from young Anthony from earlier on in the week. Sorry, couldn't get to it till now. White Hawk. The company's code is WHK Kunal. And he is unable to see why there has been a big drop in share price lately. And it has. Just calling up the chart here, fallen from around 44 odd cents, now down to 16 cents. And that's been over a period of what would be 4 months as of now. So are you able to shed any light in regards to what's happening with WHK for young Anthony, please?
Yes, absolutely. So the White Hawk is a technology/security company. The stock has been continuously falling since late January. In fact, there has been a decline of over 60% from the January high. However, there hasn't been much wrong with the recent quarterly numbers for March 21. It successfully completed its first year as the prime contractor on US federal government CIO cyber risk radar and renewed it for 2 more years. So that's the positive. The stock has reacted unexpectedly to these numbers and fell over 20% on the result update. The price is still falling, and the major support level on the chart needs to be closely evaluated, which can probably be the maximum potential of this fall as of now. So the numbers are okay, but for some reason this has been falling on a continuous basis, 60% since January high.
Okay, excellent. Now, David has asked me for my view in regards to Yowie. The code is YOW, and I dare suggest he wants to know about the price rather than the quality of chocolate. Well, look, it's in a long-term downtrend, I've got to tell you, David, but I suspect you didn't actually ask me because of that. So let's zoom in actually into today, and what do I see? Okay, so what do I see right here? I see a stock at the moment that is currently trading at 12-month highs, which is obviously good. I see a break above that 4.8 cent level, which was also quite good, a bit of a short-term resistant line there. And I see a price above the 200-day moving average and staying there for the moment, which is also pleasing to see. Even that chart there, you can see that's been that little kick up there, even without seeing all the squiggly lines that I am at the moment. Okay, it's important to note though, David, it's had false breakouts before. Okay, so it has a history of doing this. So what do I need to see before the price is in an uptrend? Well, I think I've got to see 6.6 cents, to be honest, which was the June 2020 high. You will see some selling pressure then, I dare suggest, as there will be a number of people getting out. When you see that pullback, and then if it holds that particular level, then you might go for your first little nibble there. The next target could be 14 cents. If it would break that, that's when you go with a second nibble. But it can easily melt under the heat. If you've ever had chocolate before, you'll know a summer's day is not too great. Make sure you've got a trailing stop loss on this if you're going to play this space. It does look like it's broken that short term, but that can be feeble. So you've got to have a trailing stop loss in place. There's absolutely no way to describe it. It's on the edge of going broke, to be quite frank and honest, David. So anything could happen with this one here. It's definitely one. Well, if you're going to dance with the devil, sometimes you're going to get your fingers burnt. Kunal, I will go to you for the next question, if you don't mind. An interesting one, pre-revenue and quite opaque in its operations. The company is BrainChip Holdings, code BRN. Charlie wants to know our view in regards to the business and where the company's going. Well, given they do AI technology, I was hoping it would tell me where it was going, but that's okay. We'll leave that one alone, Kunal. Why don't you tell us about BrainChip and what's happening there at the moment?
Here we go. Artificial intelligence. Technology and artificial intelligence are two buzzwords that will linger around for a very long time, and BrainChip has both. The company is a leading provider of ultra-low power, high performance AI technology. The company has applied to upgrade its US listed stock to the OTCQX, approval of which can come any time. The March quarter saw cash worth US dollars 20 million. In the current trying times, especially this entrusts the company's expansion and development path. On the operational side of things, it has begun production of the much awaited volume production of Akida AI processor. Sporadic stock price falls are a normal trait in the current volatile market. One should not be biased towards these, but conduct sound technical and fundamental analysis. And the long-term prospects of BrainChip are attractive from what we have currently seen. But in these times, even the big ones yesterday suffered. Apple, Amazon, Google, all of them suffered yesterday. So these are volatile times, but the long-term prospects for BrainChip are pretty decent.
Look, things are changing, Kunal. We know that. We see so much going on in our world. It's just the market's behaving normally, so we shouldn't get too freaked out by that. But I do want to touch on our education piece today, which is, of course, a new little topic that we've introduced to this shortened format of the Spotty program. And, you know, cryptocurrency is something that, well, we cover a lot here on this station, I can tell you that, obviously because we target a younger demographic. But, you know, we'd be very interested to we had a boom time. Things have seemed to settle down a little bit. There might be some that are interested in it. So do you have any updates in regards to what's going in cryptocurrency land at the moment and any general trading tips? I'll call them trading tips if you don't mind. I know they could be called investment tips, but I just can't bring myself to do it. So what sort of tips and what's going on in that market at the moment, Kunal?
Sure. Very, very good question. A lot of people are very, very interested in the crypto space. Okay, and let's talk about them. So cryptocurrencies have emerged as an interesting theme for investment, with the pandemic hit environment setting a perfect stage for digital currency growth. A lot of people are comparing Bitcoin and other cryptocurrencies to gold as a safe haven these days. The ultra low interest rates prevailing across the globe have been urging investors to look away from interest bearing assets to alternate investments like Bitcoin. So we will use the term alternate investments for Bitcoin. At the same time, the growing acceptance of Bitcoin as a legitimate mode of payment and the potential to reward significant and short-term gains appears to be steering a positive trend. As the sector is evolving, we can see the momentum in other digital tokens such as Ethereum. Ethereum is doing really well these days. Dogecoin drawing fresh interest from the crypto enthusiasts. In the buzzing crypto space, investors can dodge or limit potential risks by keeping crypto exposure at a low proportion of a portfolio and trading on established crypto exchanges. So one thing I would again say that crypto is going to gain wide acceptance in the near future. So one should be careful how they're investing. A lot of ETFs are coming in different parts of the world, trying to capture the interest in Bitcoin. So these are, I wouldn't say these are early days, but a lot of regulation, taxation, we will see very soon around cryptocurrency, and that will get a lot more investors coming through.
Okay, I'll be asking you about your two stocks to watch in a moment there, Kunal. But I just want to quickly cover off on one of Vladimir's follow-up questions about Whitehaven Coal. WH sees this a buying opportunity. Forget about it. It's got no hope. Look, yes, it's had a weak, pretty few days. We know coal is still required for the moment, but if you're a longer-term growth investor, I know you're a younger chap as well, Vladimir, you just want to look beyond any short-term trading cycle. That's all it'd be. Seriously, just play with CFDs if you want to make a buck or two out of a cent, but this is not an investment opportunity in my view, and I'd be leaving it wide alone. All right then, Kunal, time for you to shine the light on two stocks that we're going to sit there and listen attentively to and then do our own research and see if they align with our own tolerance to risk and investment objectives, of course.
Okay, so two stocks. The first one is lithium player. It's called Piedmont Lithium, PLL. It's listed dually on ASX and NASDAQ. The code is PLL on both the places. The lithium space is gaining a lot of traction amid the electric vehicle battery demand. This dual listed lithium player, Piedmont Lithium, has secured 5 years deal to supply spodumene concentrate SC6 to Tesla, the world's largest EV player. Piedmont Lithium is still in the pre-feasibility study stage and is expecting revenue generation in 2022 to 23. However, it has been investing more aggressively in financial year 20 in exploration and development activities. It has announced a 40% increase in lithium resources for its Piedmont Lithium project, establishing it as the largest spodumene resource in the US and the only one in North American market. In the past 1 year alone, the shares have zoomed up by 9x. Given the lucrative market opportunity, healthy financials, and decent stock returns, Piedmont Lithium is definitely a stock to watch in the near term. And the second one is a gold stock. It's called DeGray Mining Limited. DEG is the code. While gold prices have been consolidating in the past few months, many ASX listed gold stocks rocketed on the ASX, delivering sharp returns. DeGray Mining, DEG, has outperformed them all. DeGray has unlocked multi-fold growth in the Malina Basin, while Hemi and Antwerp discoveries are also doing wonders for the company. The future appears bright for the gold player. DeGray plans to further fast-track the exploration and development activities at the Malina Gold Project. Hemi prospect continues to remain the drilling focus and holds potential for new zones. Australia holds the largest reserves of gold globally, and it targets to emerge as the largest gold producer in 2021. Solid gold stocks in the kitty can be a good idea, and the gold price, as we know, has been steady for a while, but once the gold price starts rising, you will see a lot of these stocks doing really, really well.
I'm glad our Indian friend was able to put in a gold stock in there, DEG, and of course Piedmont PLL is their code. So that's all we have time for today. So on behalf of all of you, I want to thank Kunal Sawhney from Kalkine for your contribution today. Much appreciated.
Thank you.
And remember, 𝐊𝐴𝐼𝐴.com.au is where you can go to learn more about the services that Kunal offers his clients every single day. Okay, well, that's all we have time for today and this week. Go to the website, spotty.com.au, to learn who will be appearing on the show next week. Now, remember, though, once you see that list, if you have a specific question for one of those guests, question@spotty.com.au or text us 0480 079 089. Until then, well, I've been Elio D'Amato, you've been watching the new Spotty, and together we've been still shining the spotlight on shares. Take care.
It's true.